I'm here today with Jessie Vanwagoner from Castle and Cook Mortgage, and we are going to talk all things loans and lending and answer some questions.
It's an important time in lending.
Yeah, and as you can see, we have Ranger here with us. Ranger is a rescue dog with Ruff Patch Rescue, and stay till the end because I'm going to talk about him and the family that he's looking for, and who knows, we might just find the right family for him.
We will.
He's just going to hang out.
Awesome.
So, okay, Jessie, so tell me about yourself.
Yep.
Like, quick spiel.
Yep. So my name is Jessie Vanwagoner. I'm a branch manager, a producing loan officer as well for Castle and Cook Mortgage. I've been with Castle and Cook for nearly 8 years, and coming up on close to 1,000 families that I've helped.
Wow.
As far as refinancing, purchasing, accessing, second mortgage equity for them, to be able to really find every possible avenue and outlet that we can to get people into homes.
Good.
Yeah.
Cool. So what made you pick Castle and Cook?
So I actually had a unique scenario come up, actually. Castle and Cook is the primary home I've always had for mortgage lending. I actually got melanoma skin cancer as a general contractor, and it forced me to change kind of directions, get out of the sun. And I found Castle and Cook and just grew with them, and it's been an amazing opportunity. So,
Nice.
Yeah.
I learned something new about Jessie today.
Yeah.
So,
Yeah.
Okay, cool.
Yeah.
Well, thank you. All right. So let's just cut to the chase because everybody wants to know what is going on with rates.
Yeah, rates are an interesting thing, right? I mean, COVID created a kind of an amazing opportunity because of really, really low interest rates, but it also created a dynamic where values skyrocketed. A lot of people took equity, and economically, the world is we're prospering, right?
Yeah.
I mean, in the United States. However, it increases inflation. Inflation is something that we obviously are going to combat as a federal government. And because of that, they've raised the short-term federal treasury rates. They've started adjusting all these things, and we've started seeing interest rates go up. Yeah. Historically, as of about January 2022 is when we started seeing the shift. We were roughly 3% interest rates then, and the latest reports are basically the average interest rates now cresting around 8%. Yeah. So it's changed a lot. It has, but it's a double-edged sword because it's slowing down a lot of people from buying homes and looking at that kind of a market, and it creates a different dynamic and scenario that we need to look at, and buying a home right now, and if it's not the exact moment in time to do it, it's being prepared, right? Learning what we need to do, creating the roadmap, speaking with you as a real estate agent, me as a lender, to make sure that we have everything broken down and we know exactly the steps that we need to take to have everything fall in place, if it's now or if it's 6 months. Right. But truly, it's a double-edged sword when you look at this market, because if you don't buy right now because you're worried about interest rates, and there are ways to get around interest rates.
Yes.
Reducing things with temporary rate buy downs, permanent buy downs, all knowing and anticipating that the market's going to change, right? Interest rates are going to reduce, they're going to go down, we can take advantage of that. But when that happens, there's going to be a lot more buyers. It's going to be more of a seller's market. Mm-hmm. Sellers are going to be able to bump up the purchase price. At that point in time, I'd much rather buy something much lower and refinance versus spending a lot more money, and you can't really back up on that.
Absolutely. We're going to come back to that for sure too. And I mean, rates are making everyone uncomfortable. Even Ranger got up and walked around when he started talking about that. So yeah, there's definitely things I know that lenders can do to work around that. And that's kind of another question I want to ask you too. So right now, how does the Utah market differ from the nationwide market?
Yeah, so when I think we look at the Utah market, you actually look back even, the most recent housing crisis, quote unquote, was in 2008, right? Yeah. Very different scenario, completely different dynamic. Lending at that point in time was heavily subprime, and a lot of loans that should or should not have gone out did, and there was a lot of default, right? It's a completely different market. We don't have to look at it as this is going to happen again in that dynamic. And Utah is very insulated. Utah has an incredibly strong economy. We're one of the strongest economies in the nation. A lot of people are coming to Utah, moving to Utah, which also is why we've seen values go up, because you've got a lot of out-of-state people with potentially more money coming in and raising the values or willing to spend that. But we also have a massive housing shortage.
Yes.
So it's this interesting dynamic where there's a lot of opportunity. Even purchasing in this market and coming into this market, I think there's opportunity to be able to expand and grow. And a lot of different programs where Utah is very, very heavy with some different state and federal funding and grants that, you start to see, like Davis County. Davis County now has a $50,000 grant
Yes.
coming into play that can go towards down payment, closing costs, with little to nothing invested out of our buyer's pocket to get into it, right? An additional grant that was passed in legislature just a few months back that allows $20,000 to go towards new construction, right? New construction, because we're trying to incentivize builders to build more affordable housing.
Because
right?
we need houses.
We need houses, and the average house in the state of Utah is $600,000, or at least in the Salt Lake Valley, and it's incredibly expensive to be able to own. But when we can have builders building homes 450, 400, 350, 300, we need to get in and have a starting point.
Yes.
So you can't, if you've never owned a home, to jump into something that all of a sudden $600,000 with a minimal down payment. It's really hard. You're not rolling that equity and taking advantage of the appreciation, which is still expected to happen. I think just under 7% this year. I think just under 3% is the anticipated projection for next year, but it's still going in the right direction.
Homes are just still going up. Like I keep hearing people want to wait till the crash happens, or they want to wait till that just happens where prices are going to go down, and it's just not what we're seeing. Prices are just going up. They're not going up crazy like they were past couple of years, but they are appreciating still.
Yeah, and I think when it comes down to that, even if it's like, I'm waiting for that, great. If that's where you feel, but don't just sit off on the sideline and don't, limit your education, your knowledge. Spend time with a real estate agent. Spend time with a lender. Get everything in line, because what if all of a sudden you're like, now's the time, and now I'm not ready, right? Or potentially something's on your credit that could impact it. Or you can do things strategically if you're a self-employed borrower, that you know exactly how to approach, your self-employment income. You know how to file your taxes appropriately, so that you're preparing, having everything in place, and you know exactly when it's the right time. I can pull the trigger, right?
Yeah, I've been talking to some buyers who are not ready right now for different reasons, but they're going to be ready in the next year. And they're shocked when I say, well, let's start talking now, because I can give you tips on what to look for then when you're ready. I can give you a lender who can give you tips to get you ready. And when I showed that buyer that, he was like, oh, this is great. I didn't even know that those were options. I didn't know I can improve my credit this way until I talked to my lender. And there's just things that you can do even if you're not ready for another year. You can start the process now by talking to myself or Jessie, both of us, and really getting your team going, because
you never know.
Yeah.
And I haven't, we can chat about it a little bit as we progress, but a scenario and a circumstance very similar. Someone's like, we're not sure about this market. We're first-time home buyers. Like, this seems crazy. And, very similar kind of how we chatted. It's like, well, we need to be prepared. Let's go through, let's at least have a conversation. I'm like the least pressure, just want to take it easy, provide you the knowledge, the education, because the more informed you are, the more prepared, the less stress, and the more confidence you have to take the next steps forward, right? We did the same thing with these guys, and turned into a pretty amazing circumstance, and they actually just closed the other day.
Good.
So,
yeah. And Jessie and I, obviously, it's our job to sell homes, close loans, but we're really here to serve, and we're really here to help people. And so even if you just want to have a conversation with us and it's not going to lead to anything, we're here to serve. That's fine. We are happy to answer questions.
I think so. And I think, just as you said, the more you know, the more you're prepared, the more you're confident in doing it. Because who's to say, and in my circumstance, all of a sudden a property came up in Farmington, Utah for
all the time
$100,000 less than they were anticipating that they could buy a single family home for. There it was, right? And they were prepared, because they're like, let's take the steps, let's figure out what we need to do. And all of a sudden it happened. So
there we go. We're good. Okay. So speaking of first-time homebuyers, I love working with first-time homebuyers. It's actually my favorite, because one, they're more willing to listen to advice. You do have to hold their hands, but I enjoy that aspect. I love walking them through from the beginning to the end. And then when you see a first-time homebuyer sign those docs and get those keys, there's nothing more enjoyable than watching that happen and watching that dream come true for them. So for first-time homebuyers, what advice would you give them about starting in?
Yeah, there's so many key pieces that you think, and there's misconceptions as well, right, about what I need. A lot of people think, I need to have all this money saved up. I can get you into a house with potentially nothing out of your pocket, or very little money out of your pocket in general. There's pieces and parts to a transaction with real estate and a mortgage you need to be prepared for. You need to know about what earnest money is, right? A
Yes.
slight amount of money out of your pocket up front in a contract to make certain that we are, basically, I don't know why it's moving around.
Lights don't like us right now. Sorry.
It's on a timer. I think it looks fine as well
Okay.
there also. But, the misconceptions that you don't have to have all that money, right? The misconception that you don't have to have it all saved. You can get gift funds from family. The misconception that there are grants available and more grants becoming available to be able to get people into homes.
Especially for first-time home buyers.
Especially for first-time home buyers, right? The misconception that I've already had an FHA loan potentially and I can't do it again. Sure you can.
Yeah.
Right? There's so many different pieces, but I also think that at times it's such a huge investment. It's the largest financial investment most people will ever make in their lives. And it's concerning. You also feel like, oh, I'm going to get pressured or I'm going to have to do this. We're not used car salesmen.
No.
Right? We are professionals in an education position that we can give you as much knowledge and information and detail just to answer that. Right? And then maybe in 2 or 3 months from there, you're ready to take the next steps. Or, that, hey, I've been working part-time, but it's only for a year. Well, your income's not usable yet until you have 2 years of part-time to be able to average because it's variable income.
Yeah.
But if you take the steps to be able to get into a full-time position because maybe you're finishing up with your education or your college, now all of a sudden this is how it works, right? And there have been clients where it's years that we're working together to be able to build credit, boosting your credit, all the different steps and things that we can take to make certain that, hey, if your credit's, just barely brand new and established and it's in the high 500s, but we need it to be into the high 600s to be able to qualify for some of the down payment assistance programs and grants and things like that. Like, we need to know that, and we can start working on that now.
Yeah.
And be prepared, a year, 2 years down the road. And maybe that all falls in stride with, your timeline, the market, all those things. But ultimately, as we know, renting versus owning has a significant contrast. There's actually 200% more net worth in those that actually own homes versus not owning a home.
Yeah.
So,
and I mean, if you're paying rent, that's 100%. Like, you're not getting anything out of that.
You don't get a penny.
Yeah. And I mean, renting works at times in people's lives. Like, the thing about us is we are not going to come here and try to get you house poor and try to get you into a house that truly you shouldn't be in. A lot of times people will qualify for a certain amount, but that doesn't mean that's where they're comfortable spending. That doesn't mean they want to go to that amount. So what Jesse's really good at is he will tell you what you can qualify for, but then he's also going to break it down and let you know what the payments are going to be, and then let you know where you should be looking if you want your payment to be a certain amount. So say you qualify for $500,000, but you're not comfortable at a payment that's going to be anything more than $450,000. Well, then that's great, because then we communicate. He lets me know that. So then I'm not going to let you see a home that's more than $450 unless we have a real serious talk about it first, because you need to know what you're getting into. And yeah, we don't want you going over your budget. We want you being realistic and knowing what you can get.
Yeah, and I think the other piece to it as well is there's a lot of economics that need to be explained and addressed when it comes down to where the market's at right now, right? And understanding it, because it's such a confusing moment in time, and it's confusing to people even in our market. Economists are like, this is not going the way we thought, or it's not changing as fast as we could, right? But I mean, when you look at statistically what happened during COVID with the low interest rates, Davis County, as an example, from 2018 to 2022 increased 87.6% in value on a home. It almost doubled in value, right? Those are crazy numbers. But understanding the economics of where things are at, where things can potentially go to, and also looking at some real tools and tricks and loan programs and options that we have where it's like, I'm not comfortable with 7.5%.
Right.
Well, would you be comfortable with a 5.5% for the first year, a 6.5% for the second year payment, and then finally having it mature to that? Those things exist, and they don't exist in every market. They exist in this market because it's more difficult for a seller to sell a home. Sellers are going to be more motivated to give money back to you as the buyer to be able to use towards your closing costs, towards those temporary rate reductions. And oftentimes, as we look at it, one is it's a timing of, if we can get a couple of years of reprieve on payment, economically, we think that the interest rates are going to be lower in a couple of years. Then you refinance, right? It's the whole marry the house, date the rate. You don't have to stay in that program. And we even run a 36-month program where basically we remove all lender fees, no processing, no underwriting, no administration fees or origination fees, where you can simply refinance
Nice.
for as a little out of pocket, or essentially using the equity from your home to be able to do it. And now all of a sudden you bought at the low point, you refinanced and took advantage of that. And now you get kind of the best of both worlds,
Right.
right? But, there's so many tricks and ways that we can, use programs to our advantage. And we have, I don't even know how many programs, right?
A
To be
lot.
able to find ways to do it and grants and access to those.
Yeah, and Jessie is the one who knows all those programs because that's not my job. My
Yeah.
job is not to know all the loan options and everything out there. That's why we turn it over to lenders who actually know those numbers.
Yeah.
And in the same time, Jessie then turns it to us who know how to negotiate, who know how to find you the right properties and things like that. So I'm going to break it down a little more what Jessie said about, by not buying back then, now not buying now because you're waiting. So the risk to doing that, I have buyers right now who are just waiting. They're waiting for the rates to drop. Completely understandable. However, the problem that's going to happen is if those rates do drop, and we're talking even down to the high fives, if rates get down to
It's
there,
gonna be madness.
maybe even 6 at this point, all the buyers that are waiting are coming from everywhere, and they are going to be looking for those homes. And what's going to happen is we are going to see a repeat of 2021 where homes were just going like that and like that, and people are basically selling their first child to get a home.
Yeah.
Like we had to do crazy things to get offers accepted.
Yeah.
In some cases. And we're talking 50 offers on one home in one weekend. And that's what we could be potentially looking at again as soon as rates drop. So the benefit to buying right now, if you can afford it, which is of course the most important thing, the benefit to buying right now is that you can search for a home. You don't have to make a quick decision like so many people had to do, where you are walking through that home in 15 seconds and have to decide if you want
and
it.
paying 10, 15, 20,000 above
Over
and beyond
what it's worth.
what it's worth.
Yes. And you can actually look at multiple homes and you can pick a home that is actually going to work really well for you. You can ask the sellers to pay for things that we couldn't do back then. It was unheard of to ask sellers to pay for closing costs, to pay for a rate buy down. Like it was impossible. Your offer would have been tossed.
Yep.
But now you may be the only offer they've seen in weeks, and you can negotiate a lot more right now, get into a good home, and then refinance when those rates come down. Instead of having to be in that crazy buyer market, you're already in your house and you can refinance.
Yeah. And kind of to touch base on the scenario that I was mentioning, they were, I don't know if we're ready. I don't know if this is the market. And I said, what we need to be prepared for is when the right home comes on the market, right? Having your eyes open, being prepared. Because as we know, renting, you get nothing, right? You pay the rent, you live there for the month, you pay the rent again, you live there for the month. When you own a home, a portion of your payment goes towards reducing the principal of the loan, which is like putting money in a piggy bank. And even if we see 5% return on average over the next 10 years, right? You buy a home for $500,000, 5% return on that's $25,000. Right. That's almost $2,000 a month that you accrue in appreciation on that property alone, right? And then that compounds year after year after year after year. We'll have high markets, we'll have low markets, all those things are going to happen. But when you do the math, it's a staggering amount. Yeah. And it's not a shock that those that own homes versus renting, we all start renting. I rented multiple places before I ever bought. But if you don't take that step, or you don't get into it, or if you're not prepared to take that step, it's really, really difficult to make that transition, right? And because then it just starts compounding, right? And then oftentimes if we wait too long and too far, that market can pass you by. Absolutely. The market that we see right now is not the market we're going to see in 10 years. No. The value of these homes are not going to be the same. My anticipation, economists, everybody else, and especially with what appreciation is expected to do, a $500,000 home now may be worth $600,000, $650,000, $700,000 at that point in time.
Absolutely.
Right? And it's a lot about location. And I think the point that you made that we have the time. Yep. You have the ability to go and look at a lot of different houses, make informed decisions, take your family through a second time, make sure that everything is reviewed and looked at.
You can actually get a home inspection now.
Home inspection. You don't have to
which people were not doing in
waiving
2021,
all contingencies. We don't care. We want it. We don't care what it appraises for. We don't care if it has a roof on it. Those were, hypothetically, but that was happening, and all due diligence was being waived. We'll take it as is, which is a risk that you don't want to be in, and you don't have to be in anymore. Yeah. At least in this market.
So yeah, it may seem for buyers that it's a bad time to buy, but honestly, it's a good time to buy.
It is.
It is very beneficial for buyers to buy in this market.
It is, absolutely. And it all starts with being informed. right? Knowing exactly what the parameters are, what we need to do. Maybe it's in 6 months or a year, but at some point in time, if you want to buy, there's not a better time to start at least digging through the details and understanding the process like right now.
Yeah. And so what I would suggest is chatting with me, chatting with Jessie, and just getting things going, seeing where you can be. And then what I can do is I can just start sending you auto emails of homes that fit that range of what you're looking for. It's not a big deal for me. It's not a big thing I have to do. But then just emails come to you and you can start looking at these homes. And if there's one that, you know what, that I want to see that. I want to go look at that. We go see it. And you have already talked to Jessie. You already know what you can afford. And it may be the right one. I've had buyers that have happened, they were not expecting to buy. That right home came through their email. We saw it. We closed in 30 days because they were ready. And that happens more often than you think.
Yeah, my Farmington buyers, that's exactly what happened to them. They got the maximum seller concessions. There was actually a reduction of about $15,000 off of purchase price. We took an additional 3% in seller concessions of the total purchase price, and they additionally replaced all the flooring for them.
Yeah.
Right? I mean, it's like everything you could possibly get in the scenario, they were loaded up with.
Yeah.
You know, and it was a great opportunity for them, and it's a great starting point.
Yeah.
You know, for them to be able to get into it. But it has to make sense to you. And that's what we want to make certain of, is that we provide you the details, the information, and the knowledge that you otherwise don't know, because you don't breathe real estate or mortgages for a living. And it's at times it's like, how do I even get started? The easiest outcome is I'm just not going to, because it seems like a bad market to do it in. Kind of the different time. You should be doing it more often now than before. And if anything, you just have more knowledge.
Sure. Yeah, and I think the biggest thing is, I mean, there's people now who are like, 5 years ago, I wish I would have bought. I wish I would have bought. And then 5 years ago from that, I wish I would have bought that condo for $100,000 as an investment property. I mean, what are we going to be saying in 5 years from now? You're going to be saying, I wish I would have bought. And I mean, can't help you then, you know? Like,
well, and if we do the math in 5 years, let's say you pay $2,000 a month, you know, that's $120,000 that you pay in rent in the next 5 years. That's potentially a quarter of what you may be spending on an entire house.
Oh, that's hard when you think about it that way. That's a lot of money.
And it's just, you know, I mean, my brain thinks a little bit different.
He's a numbers.
I'm a numbers person, and I go through and I think about all the opportunities and the benefits. And that's where the more you understand that, the more you learn that, and the more you can comprehend that and have just casual conversation, it helps you understand.
Yeah. So people that maybe need some help with their credit, what are some tips that you can give to kind of help build a credit?
Yeah, so I mean, a lot of it starts with obviously what credit you have. Let's say you have no credit. You need to get it, right? I mean, it's hard to be able to get credit if you don't have it. And a lot of times people think, well, you know, if I don't have any credit, then my credit's great. It's not. You have to establish it. So oftentimes the first steps at times is if you have no one in your family that can help in regards to potentially putting you on as an authorized user, say on one of their credit cards. You know, that's one of the fastest, quickest ways is you have mom, dad, brother, sister, grandma, grandpa that is very responsible, doesn't, you know, take their credit card utilization up real high. They pay it off every month. You know, they're just rock solid, and they're the ones that have the 800 credit scores. You know, in those situations, we get added as an authorized user. So now all of a sudden, all their payment history reports through for us, right? If we can't do it that way, go get a secured line of credit. Take $100, $200, $500 to your bank or credit union and say, I need a credit card that's secured by my money that I've already put down. So there's no risk to that lender. And all of a sudden you have a $500 line of credit. You charge it up, you pay it down. The biggest thing is not using over 30% utilization on your credit. If you exceed that, you're going to start seeing your credit get negatively dinged.
So will you explain that more?
Yeah, so if we have, for the ease of number, let's just say we have a $100 limit on a credit card. If we have a balance that reports over $30, that's 30% utilization. So over that, it's going to start reporting negatively for your credit. So what you want to do is charge your credit cards every month, pay them off, and get them to as low or to a zero balance, and have that report. You need credit. It's a combination of how many types of credit. What trade lines do you have? Are they revolving credit? Is it installment loans? You know, like a vehicle. Yeah. You don't want to have a vehicle and pay it off as fast as you can, because then all of a sudden you took credit, but then you paid it off. You want that to show that history, payment after payment after payment of on-time payments. And that's what builds your credit and builds your credit and builds your credit. Now, if you've already got credit, Kind of one of the fun little things you can do is Experian. Experian is one of the 3 credit bureaus.
Yep.
ExperianBoost.com. Simple as it is. Go to that website, click start. It'll have you go through, link yourself through to it, link your accounts to it, and all of a sudden it'll go in and say, hey, you're paying your cell phone bill and your gas bill and your power bill and all these different things, but that doesn't report to credit. So now Experian will go in, pull that history, and be able to then report that as a trade line on your credit, and your Experian score will start driving up.
Nice. I've never heard of that.
So the 3 different bureaus, what we look at, and all lending is going to look at this, is you have 3 different credit scores. You have a mid score, right? So let's just say you have a 700, a 750, and an 800. Your 750 score is the score that's going to be used to assess and base the risk. Realize we're giving hundreds and hundreds of thousands of dollars.
Yeah.
We need to make certain that that is secured, and the biggest way to do that is 2 ways. One is, how much money are you putting down to avoid risk? Because if you do default, then there's money on the back end that we can recoup the loan, and if there's left over, then you get it back, right? Yeah. Hypothetically. On the flip side, the biggest piece is to make certain that the risk is limited, and a lower credit score creates a sign of risk, right? If you haven't made payments, if you've been late on payments, if you carry really high balances, if you all of a sudden, dispute charges and have a lot of different accounts in a derogatory state. If you've had, bankruptcies, foreclosures, short sales, all these things impact your credit, and it takes time to be able to get those back.
Yes.
Now, if we've beat up our credit and it's really difficult to get back, that's where we bring in real specialists, right? I mean, I'm not by no means, the expert at credit, but we know a lot of things that can be done to be able to improve it. But there are credit repair companies that will actually go out and say, hey, you guys are stating this, prove this. You can't prove it, then we're going to request that to be removed from the bureau, right? And they can help build your credit and boost that up. There are minimum credit scores that are required for each type of loan program. And if we're a first-time home buyer looking to take advantage of grants or down payment assistance programs, they'll have a threshold as well that we need to make certain that we get to.
Yeah. And those links you talked about, I will make sure to put those in the comments so that they can get to those. So, and just to end, well, actually, a few of the loan programs that you talked about. So we do know that there's that $20,000 new construction grant. Grant, kind of loosely, but so that is for new construction under $450,000 in the state, and is it just for first-time home buyers?
So it's first-time home buyers. They have to have also lived in the state of Utah for 12 months.
Okay.
So an interesting piece. Now, the other interesting piece, and the relationship that Castle and Cook Mortgage has with especially Utah Housing, which in 1976 was put into place from state legislature to provide down payment assistance for buyers, right? Whether you're a first-time home buyer or not, if you just need money to be able to, bridge that gap, that's what it's for. So in doing that, these programs are specifically designed to be able to give you the opportunity, right, to buy a house. The $20,000 grant, the unique thing to that is legislature stated $450,000, but they're also probably going to, and they have the ability, I didn't know this until I actually met with one of the top executives at Utah Housing, is that they will be able to potentially boost that purchase price.
Oh, nice.
So if it needs to go to $475,000 or $500,000, then it gives a little bit more flexibility to be able to still take advantage and use that, right?
Okay.
So on that, you can actually reserve those funds before you're even under contract.
Yeah.
Right?
Yes.
And they can be extended and extended. You actually extend them for even a year.
Yes.
Right? To be able to take advantage of that. We have to get your qualifications in place, make certain that we know what we're doing. But at that point in time, like I have someone in Brigham City that's now under contract, the new build, it's not going to be completed till December, but we got their funds reserved. They're held. They're there for them. And we'll use those to be able to cover their down payment, closing costs, and get them in for next to nothing. And those grants oftentimes have, they're going to probably need to be paid back when you sell or refinance that home, but it bridges that gap and allows you to be able to get into a home with little to nothing down. And those grants are adjusting and changing, and the rules and all these things are updated to really be able to create housing. Cities still need to continue to grow. They need to develop, and they're going to do everything that they can using a lot of these CDBG grants to be able to bring money in, to be able to push that through to allow home ownership in those communities.
Yeah, and another great one that I've heard of is the first responder grant, the law enforcement grant. I had a buyer who was going to use that grant as well. It's up to $25,000. I know that depends on some different aspects, but that is there as well. That's also for first-time home buyers, or if you have not lived in a home for 3 years, not owned a home for 3 years. then you can also qualify for that one. So
Yep.
I'm a police wife. I know a lot of police wives. So if you have any questions about that one, let us know
Yeah.
too.
And the other piece that Castle and Cook is very affiliated with is what's known as Homes for Heroes.
Yes.
Right? There are programs where in those you can become basically united with a real estate agent and a lender that's associated and affiliated with that. And it also allows you to be able to take advantage of special things to be able to get into house and basically get money back on the back end. And you can couple that with Utah Housing and with the law enforcement grant. You know, you can just kind of build on this to really be able to, all of a sudden, you've got 0% grants or very minimal cost grants that you don't have to pay anything back until you get to that point. You use all that money up front to be able to reduce that loan amount below that purchase price. And now all of a sudden, hey, I can do this. I can have that payment. You couple that on top with the temporary rate reduction where
or
you
a
get
permanent rate reduction
or
too.
permanent, yeah. Statistically, you know, the crazy thing is if you just say, hey, I just am going to buy this house at this point, and you know, I don't want to take any seller concessions to do this or that, so be it. It's great. Here's the payment. But if you do a permanent rate reduction, you actually commonly see about a 300% improvement versus just reducing the loan amount.
Yes.
Temporary reduction is up to 500% improvement as far as, you know, month over month payments that you're and savings that you'll have there.
Yep.
We'll break everything down. We'll explain everything in as simple of terms as possible. And when you don't understand it, we always encourage you to ask, tell me that different, right? That is so over my head, or you speak too fast, or, you know, we want to explain everything and we will be patient to make certain that you understand and know, because it's the American dream.
Yeah,
home
for
ownership. Sure. It's what separates and situates you from being able to have substantial net worth in the long run.
Mm-hmm.
And, you know, some people have the dreams of only owning one home, and that's all they want. And that actually started with one of my clients, and he said, I only have to live in this house for 1 year, right? And then I can go buy the next house. I said, you absolutely can. Here's what we need you to do throughout this next year. Yep. Here's how much you need to save because we're going to buy your next house with 5% down. Year after year after year after year. This started in 2017. They bought homes up until 2022, 5 different properties. He now has over 1.3 million in equity.
Yeah.
Right?
Yeah. So, okay, this will be the last topic, and then I'll leave you alone. But that brings me to sellers, right? I mean, people that are living in a house right now. Mm-hmm. The thing they're having a hard time with is they don't want to lose the rate they have.
Yeah.
And I don't blame them. They're sitting in a 2.99% rate on their house.
Yeah.
But that house isn't working for them anymore. Mm-hmm. They've outgrown it. They want to move to a new area. They want to live closer to work. They want to go to their grandkids, like all these things. What is a way that they can keep that home and keep that rate and yet still buy another property?
Yep. So occupancy is the biggest thing, right? When we bought that house, we likely bought it as our primary residence. A primary residence is the most cost-effective, best term, best rate way to be able to get it and transition through homes, right? It's not terrifying to be a landlord. I thought it was the very first time I did it. And then the second house that I did, I thought it was terrifying. But there are ways through this. And at times, you know, it's kind of known as the golden handcuffs, right? The golden handcuffs, because they're golden, because you're in a 2.99% interest rate, and you don't want to jump into a 7 or an 8%, depending upon the market. And so in these scenarios, you also have a ridiculous amount of equity in that, right?
Yep.
So
and a very small payment, most likely.
And a very small payment, which is going to render you the ability to be able to cover that first mortgage payment, your taxes, your insurance, and potentially we tap into a little bit of equity in that current home to give you the money to be able to then go and buy the next house, right? You go buy the next house as your primary because it's not big enough, right? A lot of people that have bought a home in 2020 may have had one child or 2 years later. What if you had twins? What if, who knows what can happen, and all of a sudden you have a 2 or a 3 bedroom townhome and you essentially have 3 kids, right? It doesn't work. Or a single family home that's much smaller. So, you know, the scenario is one is if you want to go buy and you want to go do that, great. If not, the average home in America, $200,000 worth of equity.
Yeah. Especially if you bought before 2020.
Exactly. Yeah. Exactly. And there's some with significantly more, some with obviously less, depending upon when you bought it. The average home has $200,000 worth of equity. And in these circumstances, that maybe it's just not big enough. Well, maybe we think about buying the next house and leveraging and learning how to do that. And you offset your current home with a lease agreement, which basically can wash the payment off. And now you don't have to qualify for both mortgages. And you didn't realize, oh, I can do that. I didn't know that the first house. I would have
I-
never sold my first
I
home.
would have never sold my first house.
No
either.
idea.
I
Yeah.
know.
Where were my parents or where were my educators at that point in time? And the other piece is, you know, and again, it's because we care genuinely about every person's circumstance, is it may not be buying or selling. It may be accessing some of the equity and blowing the top of the house off and adding 2 or 3 bedrooms, or building back, or adding on an ADU, which is an accessory dwelling unit, for potential additional rental income.
Yeah,
and earnings.
absolutely. My best friend is remodeling her whole house to fit her family right now. And that's great. They don't
Yeah.
need to move. They could just completely remodel their house.
Yeah.
So what Jessie is saying is basically you can use your equity that you have in your house to go towards a new house, but keep that current house and put renters in there.
Yeah.
And you can charge them enough that you're covering that mortgage and you're covering the loan to cover the equity that you're taking out as well, most likely, and sometimes even get more money because rents can be higher. So not only are you keeping that house, you're keeping an investment property to go towards your future, but you may be even making a little more money to go towards your next house.
Yep. You're cash flowing, you are likely still appreciating. Additionally, when you have a really low interest rate, when you look at the amortization schedule of how it works for a mortgage, you are paying a significant amount of your mortgage payment. It's actually going to the principal, right? So when you add all these numbers up, you're like, holy smokes, it's, you know, at times, yeah, we need to move. We don't want to keep the property and we're just going to take the equity and buy the next one. Perfect. But at the same point, if you have that property already and it's in a 2.99%, that loan doesn't get touched, right? We don't impact that at all and it stays there. So you're applying significantly more of that principal and interest towards the principal of the loan. And in the long run, greatly, greatly increasing your net worth and your opportunity, you know, 10, 15, 20, 30 years down the road.
Yeah, for sure.
For your retirement, you know, and that's the way that I look at things. I don't look at it today in this transaction and then adios. It's you're in my cell phone saved probably for the rest of your life. I'm going to answer, hey, Darcy.
Yeah.
And we're there to be able to build and support whatever your goals and dreams are, not just for this house, but potentially the second, the third, the fourth, the fifth.
Yeah.
I have someone that has 18 houses.
Nice. Yeah, I mean, as cheesy as it sounds, if you're my client, you become my friend, whether you like it or not.
Yep.
So
absolutely,
because that's
the
how
way it should be.
And that's the way I like to do my business.
Me too.
I am here to make friends and I'm here to support people. And it's probably the best aspect of this job.
Yeah. That's the way the business should be done.
Yeah.
And it's who we should always be looking for in all aspects of any business. It's the service, the communication, and, you know, the commitment that they'll always have us.
Yeah. So Ranger is seeing kids outside, so he's getting excited because he loves kids. So I think we're good. Do you have anything else?
No, I think the biggest thing, and you know, I'm sure you'll add our contact information and details in. But the biggest thing that I would encourage you is if you have interest, if you have any desire to learn more, to understand more, and if that's it, great, call us. Let us know how we can help, how we can, you know, prepare you for, you know, a month or a year or 5 years down the road. But, you know, take advantage of the opportunity that we want to extend of ourselves so that you have someone that you can truly rely and trust in.
Yeah, well, thank you. I appreciate your time. So we are going to post this whole video. You can follow me on Insta at Realtor Darcy. I don't think you're on Insta, are you?
I'm not a huge social media person, but
what's the best way they could reach you?
My cell phone.
Okay.
801-499-2400, and that'll be, you know, posted as well.
Perfect. Yes, we'll have all contact information. So now we're going to get to Ranger.
Let's do it.
So as the Dog Friendly Realtor, I really am big on adopt, don't shop. We want to adopt rescue dogs because they are the best, and the love that they are going to show you. Oh, he's good. The love that rescue dogs show you is just incredible. I used to foster dogs for Ruff Patch Rescue, and then I adopted one of them, and then I had too many dogs. So now I do other things. And one of the things I wanted to do in all of my interviews is bring a rescue dog. And I'm grateful that Castle and Cook let us bring a dog because it's kind of unconventional for an interview, but that's where we are. So let me see if I can get this boy to wake up a little. Ranger, come here. Oh, you little sweet. He's happy. So I want to explain Ranger. So Ranger is 7 months old. What kind of dog do you think he is?
I think there's a, you know, lab, doodle, retriever, you know.
He is a labradoodle.
There you go.
Nice job. You got it. Good job. So he's 7 months. He will be available for adoption through Ruff Patch Rescue in about 30 days. Now, Ranger needs a very special family. And the reason why is Ranger has a condition called megaesophagus. So that means that Ranger cannot eat food the regular way. If he does, it doesn't go down correctly, he's going to throw it up, or he could even aspirate. So how he eats is he has his own special high chair. Most people don't know dogs can have high chairs. So he has this chair that he sits in. Come here, Ranger, let me show you. And he basically is sitting up like this. And he will get in his chair and he'll eat his food that way. It's really important that that is how he eats food, including treats. So he's not a dog that you can just give treats to. And the reason he needs a special family is he needs a family that's going to be very responsible about not dropping food on the floor, because he cannot go and grab food on the floor and eat it. So the home he's looking for, a responsible family who's going to make sure there's no food on the floor, there's no food outside or things that he can eat out there. He loves kids, and would love to be in a home with kids, but probably kids that are old enough and responsible enough to know that food rule and make sure that they can handle him. He is potty trained. He's going to be fixed. He's going to be neutered here soon. And he is just a fantastic dog. I mean, he's just been sitting here well-mannered. He does like to play still. He has a playful side. And he's 7 months and he's this like well-mannered and calm. So he is going to be a great dog. He's about 40 pounds now. He'll be probably about 50 pounds when he's full grown. But I don't know. Jessie here might take him. So
we are looking for our second.
Well, there you go. He gets along great with dogs, cats, kids, all the things. He's living in a house now that even has pigs, and he's doing great with them, and chickens, and he doesn't chase them or anything. So he just needs a little bit more of a special family. So if you are interested, you can go to ruffpatchrescue.com and fill out an application. You won't see his picture on their website yet because they want to get him used to his chair a little more. Oh, and then one thing, people are like, well, how do I train a dog if I can't give him treats and I can't train him that way? The best thing to do is affection. This dog loves affection. So if he's doing something good when you're training him, give him that affection.
I petted him. He's like,
and he's happy.
Warming my right foot.
Yeah, he is a sweet, sweet boy. And the only issue is that food. And if you can work that out, I mean, he's trained in his chair. He's ready to go. So if you want him, let us know. The Dog Friendly Realtor is happy to help. So if you have any questions about him, and Ranger, what are you doing?
Just trying to get close to the camera, say hi.
Anyway, thank you, and thank you, Jessie.
You're very welcome.
We're at the end, and now my voice is going. So appreciate it. Follow both of us, and let us know if you have any questions.